All right, we love growth here, but we also have a $3,000 gold price. I'm not sure what it means, but I'm not thrilled about it. Joining us to talk about it, Steve Forbes, Forbes Media Chairman, Editor-in-Chief, and John Carney, Breitbart Editor of Finance and Economics and co-author of the daily Breitbart Business Digest, which is a must-read. Steve Forbes starts you off on gold, $3,000. I don't know. It just doesn't sound good to me.
No, it isn't. And the Federal Reserve is looking at the wrong stuff. They think the economy is, a buoyant economy causes inflation. No, a weak dollar causes inflation. And what we have now is a weakening dollar. We saw that even before COVID. They jacked the price up. The gold price went up from $1,200 to almost $2,000. Then you brought COVID in, and we saw what happened there. So this is a warning sign that the Federal Reserve's fight inflation is not over, but you don't cure it by trying to depress the economy. You go for a stable dollar. All the currencies around the world are weakening right now because all the governments are messing up. So the Fed should look at the gold price and say, okay, we need a buoyant economy, but that doesn't mean inflation. We want a stable value for the dollar. And if the gold price keeps going up, we're going to be back where we were in the 1970s. Not good.
Not good. Yeah, I agree with you on that. But, John, it is possible that Jay Powell threaded the needle today. With respect to what Steve just said, I mean, basically, I know he's not listening to gold, and I know he doesn't care about the dollar value. Okay, I know that. But he's keeping his monetary powder dry. I think they're going to keep it dry for many months. And in terms of the tariff story, the greatest story that's never been true, tariffs are not inflationary. And I thought he did a pretty good job threading the needle on that, too.
Absolutely. The press in the room was trying to bait him into a fight with Donald Trump. He said, no, we're not going to do that. They said, how much of the inflation expectations that have moved up is because of tariffs? He said, we don't know, which is the right answer. We don't know how much of the expectations or how much inflation is going to say. He said, we're going to look into it and try to figure it out. But they really wanted him to blame tariffs because that's been the media narrative of why inflation expectations are going up. He also said, importantly, they don't care that much about the one-year inflation expectations. When they talk about expectations being anchored, they're talking about the 3 and the 5-year and the 10-year. They're not really worried at all. And the bond market is telling them the same thing, which is that the long-term inflation expectations haven't moved up from where they are, so there's not really the tariff panic causing inflation that the media wants people to.
Yeah, one thing, you just reminded me, one thing that Scott Bessent has made very clear, the administration itself is not obsessing either about the Fed or the Fed funds rate. They're looking at the 10-year, which is a broader measure, more widely held, I might add, here in the U.S. and around the globe. As a matter of success or failure. And the 10-year has come down by, 50 basis points on balance. It's brought the mortgage rate down. So that's pretty good. I mean, if you use that as a pass or fail, right now they're passing, okay? And the media is trying desperately to use tariffs to hammer Trump and say his policies are a failure. The media has already announced one recession, which we have not had. They've announced one massive inflation increase, which we have not had. And the stock market, the Mag 7 let it down. It probably was overdue for a correction. I loved your piece on that, John Carney, a couple days ago. But the market's coming back. It was up 400 today. It was up 500 yesterday, or maybe not yesterday, the day before. And there was this coming back. Stocks fluctuate. This story is a lot better. The mainstream media, the liberal media, wants to hammer Trump. I would say right now, I'd say Trump 10, media 0.
Well, and the thing is, in terms of Powell, you said he's one time right, yeah. So give him credit. It's like the New York Post when the Mets won their first game, they said Mets undefeated, and
right.
And so, but the problem with the Fed is, and I hope Powell maybe is converting, is making the distinction between non-monetary inflation and monetary inflation. Tariff could raise prices or not, but that's something the Fed can't do anything about by jacking interest rates. They can control the value of the dollar. If he focuses on that and lets the other stuff work its way out in open markets and political process, that's fine. What the Fed can and cannot do.
John Carney, the other point I want to make is the liberal media has been forecasting recession as a result of Trump tariffs, along with inflation and so forth. But I don't see a recession. If you look at what manufacturing, industrial production, business equipment, the supply side of the economy, which is so very important, you're actually December, January, and February, which is all post-election November 5th, you're looking at a boom in these production and manufacturing and business equipment numbers. It has a lot to do with the expectation of 100% depreciation, expensing, immediate expensing, retroactive to January 20th when he was inaugurated. This is a fabulous thing, but the actual numbers are booming here. Not only are we not in a recession, they're booming.
That's right. This is a boom. It is actually, as Kevin Hassett just said, it is undoing a huge part of the decline that we saw under Joe Biden, at least in that last year. So we are having a boom. It's related to what you were just saying about the 10-year. Because the 10-year Treasury actually does a lot more than control the 10-year Treasury. It controls borrowing rates for businesses and consumers and home buyers. So another number that we just got in really good was housing starts were a lot better than expected. Why is that? Again, when you're bringing down the long-term interest rate, you're actually bringing down the borrowing cost for businesses. Look, the very short-term rate that the Fed pays attention to, I'm really glad the Trump administration is saying, we're just going to leave that alone. What really matters for the economy are the long-term rates, because that's what feeds into business expenses, home buying, people buying cars, people's credit cards. That's what really matters.
All right, we'll leave it there. Steve Forbes, thank you very much. John Carney, thank you very much.